So gold and silver is what we're looking at, and gold isn't looking too hot right now, I'm not gonna lie, especially once it did break out from here. Let's actually adjust this, and instead we'll place a rectangle on the chart because it's trading between a couple of ranges. So around these regions here, I would say. So chances are gold is going to be dropping down. I'm not going to lie, minimum to this trend line, even to the bottom of here. I'm thinking about popping a stop loss on. If it loses this trend line, I may be okay to get out of gold because it is going more red on the MACD and also on the RSI. It is going down to the oversold sort of region, so I guess I could hold on for a bit longer. It is a store of value. If you actually look at gold, it is a store of value over time. It tends to go up, but it's not out competing inflation. It's just storing your money. With silver, I feel like there's more of a use case because it's used in a lot of things, and silver hasn't broken its all-time high, or just about has broken its near-term high, and also it hasn't broken its all-time high yet, which is and could be insane. So for silver, recently hit its highest level since 2012, trading above $36 per ounce. The gold-silver ratio has dropped, reflecting silver's relative strength versus gold. Silver futures have fallen amid easing geopolitical tensions after what we heard yesterday. So, why silver could go higher? Industrial demand remains strong. Solar panel production, electronics, EVs, electric cars, medical uses are boosting consumption. Demand continues to exceed mine production, creating shortage. And ongoing macro uncertainties encourage investors to allocate to precious metals, and precious metals will probably go up over the long run, including silver and copper. And silver is a fine material, so it's used instead of copper because it can transmit electricity quicker. So think about all this AI revolution, this boom, people using technology. They're not going to want to use copper, they want to use the best of the best. So they're not going to use gold, they're going to use silver. So wait for dip case, reasons for a pullback. Technicals are showing overbought conditions. RSI readings suggest short-term consolidation or pullback may occur. Resistance near $35 to $36. If silver fails to break sustained above 35 to 36, profit taking is possible. A strong US dollar, rising yields or slower industrial growth could cap further gains. So key levels and strategies. So support zones to watch is about the 31 to 32 region. Act like buying spots on any dip, and resistance zones are 35 to 36, which is what we're seeing today really if we look at the silver chart. You know, if we look at silver, it is actually correcting, and that's when I wanted to show you and update you on silver and gold, so maybe we could get a prolonged correction on both of them. However, if there's any war news coming out soon, then expect them to rise. Most models suggest 35, 38 by mid to late 2025. Bull case extend to $40 to $50, and some ultra bulls envision even higher. The problem with gold and silver is they take ages to move. Ages. So it's going to feel like a decade holding them. They're not even like stocks. They're more like worse than stocks. Like crypto, we're seeing everything a lightning space. Bitcoin's going up or down all the time. You can make money off that. So is it a good buy? Yes, from a structural standpoint, silver has momentum and strong demand. If you're prepared for volatility, so I would definitely buy on support zones. Consider a staggered entry or buy the dip approach. That's what I'd recommend also. Wait for a short-term pullback near 32, 33, then build positions. If you prepare riding the trend, allocating gradually while keeping protective stops can help managing risk around the $35 resistance. So with gold, spot gold recently dropped following a ceasefire. Bull case, safe haven demand from geopolitical unrest keeps buyers interested. Central banks are buying, and they're always buying, which means something is up. They know something. Fed expects to cut rates, weakening real yields and supporting gold. Breakout from long-term technical levels cleared the resistance from 28 to 2900. Central banks, buying remains ongoing, adding structural support. Pullback risks. Overbought technicals, RSI is high with MACD divergence. Short-term corrections appear likely. Resistance at 3380, 3400. This key zone has caused rejections. Profit taking could intensify here. If we actually look at gold, what price is it trading at now? Why have I typed in silver when I need to type in gold? I will never know. 3,300. Yeah, I think profit taking might continue. Yep. Analysts warn 15 to 25% correction in case of a sentiment shift. So maybe, just maybe, intermediate support 3.2 to 3,300. Key support 3,140, 3,180. Deep support 3k. Oof. It might be time to actually consider selling my gold. Because, well, you know, with that money, you know, with gold, like, it's pumped a lot for gold. Don't get me wrong, it can pump a lot higher and it can make people a lot of money. And it is a safe haven. And it's been here for hundreds and thousands of years. That's the only reason I want to keep it in my portfolio. I just think I went too heavy. And then silver, obviously, I think is the best buying option out of the precious metals. Aggressive approach. On momentum, you can nibble in with a tight stop loss at 3,380. More conservative way to dip towards 3,200. Cleaner entry, lower risk. I feel like that may be the spot to buy. Consider a breakout strategy above or pullback buys near 3,200. Always use protective stops below 3,140 or 3,000 depending on your time frame. I think if we put a stop loss on this, I think that would be the best option. I'll need to put stop losses on each of them. And we'll go from there because they are all red, which is not looking good. It's only a few quid, so I don't really care. But it was a learning opportunity. I think I may even add more. It depends. Backed by geopolitics, dovish Fed expectations and technical strength, overbought conditions and key resistance may spark a pullback. Smart entry zones. This is the most important. You know, if you're ever buying anything, the entry is the most important thing. Because if you start by buying when it's overbought, when everyone's scared, and selling when it's max euphoria, you're going to tend to win. Because you're going to be in profit the next day and you're going to want to hold. And you semi-feel like a genius, even though that is worrying. You need to have stop losses and take profits. Yeah, it's just a lot better seeing it in green rather than red. I also want to buy more PepsiCo, so I want to see more red with this as well. Let's see how it goes. Can it come down to the COVID low as 100? 100 would be a major buying opportunity for me.